It's early. Hopefully we can create some interesting insights for you. We will be talking about exit strategies, about acquisitions, about taking companies public, about what makes sense and what doesn't. And I would also like to talk a little bit about what makes sense for Israel in terms of building companies. I would like to start by letting our panel take a few minutes to introduce itself. I will start with myself very briefly so that my distinguished panelists have more time to talk about what they do. I feel I still am an entrepreneur. I've had a career where I've had the opportunity to build a few companies that got acquired. One was SpeakCube, one was Pentacom. Previously, I was part of the VocalTech journey, which was the very first voice-over IP company, and that went public on NASDAQ in '96, I think. And more recently, have been on the other end of the entrepreneurial scale, mostly on the investing side, as part of two different but complementary, I think, investment portfolio managing entities. One is Innovation Endeavors, which is the single LP is Eric Schmidt, the chairman of Google. And our focus is both to create early stage investing in seed, Series A, sometimes later. But we're also focused on creating innovative platforms to help entrepreneurs come together, bring up their ideas, test them out, and then help them take it to market. My other hat is called Marker, which is New York-based, and that's a later stage investment vehicle where typically the investment sizes are larger and hence the stake is larger. And between the two, we're very focused on helping grow and create new and exciting companies. With that, I'd like to go around the table and have all of you introduce yourselves.
Good morning. My name is Bruce Aust. I'm Executive Vice President with NASDAQ OMX, and I run our global listings business. There's roughly 3,600 companies that trade on NASDAQ OMX that I'm responsible for. So maintaining those relationships and helping them be public companies, as well as attracting new listings to NASDAQ OMX. We are very proud of our relationship here in Israel. We have about 70 companies that are from Israel, and we have a very strong pipeline of IPOs that are expected to come in the next 12 months. So Israel is a great market for NASDAQ, and we're excited to be here.
My name is Serguei Beloussov, and I'm an entrepreneur and recently became investor and then came back to be a professional manager entrepreneur again. I founded these two companies which are listed above when we were shown, Parallels and Acronis. Both are multi-$100 million software companies, global companies. One is backup and storage. Another one is virtualization and automation for service providers and other purposes. After I ran Parallels for about 11 years, in 2011 I started a venture fund, which is a multi-$100 million venture fund between Silicon Valley and Russia, investing in technology companies. We have a portfolio of about 45 companies in that fund. However, recently I had to go back into operational role in Acronis, and so now I'm CEO of Acronis. So I've done both, all kinds of different ways to generate liquidity for shareholders in the companies I ran and in the companies we've invested in. I'll be glad to share my views on it later. Thank you.
Hi, good morning. My name is Ben Lazarus. I'm a partner in PwC Israel. For the last 14 years now, I've been working almost exclusively on helping companies integrate businesses they buy and helping companies prepare themselves for growing up and scaling, including companies moving to be IPO'd. My focus currently is working largely with companies in the high-tech sector on integrating businesses they acquire, companies like Stratasys, Mellanox, and others such as that. Since I made Aliyah 6 years ago, I luckily came to a country which has a very, very active M&A market. I think this year with the Facebook deal, the number of exits in M&A has exceeded $5 billion. So it's a very exciting market to be in. And that's it for me.
Good morning. My name is Drorit Vilnai, and I'm the head of the listing unit at the Tel Aviv Stock Exchange. As you can tell from the name of the unit, the listing unit is responsible for listing all kinds of securities on the exchange, and also approves every application that is filed on the exchange. So every one of you can feel free to contact our units with any question that you have about filing your company on the exchange. Before joining the exchange, my professional experience is at the Israeli capital market, first as an analyst and then as an investment banker in several underwriting companies in Israel. I'd like to share with you a success story of an IPO. I would like to share with you the story of Kamada. Kamada is an Israeli bioceutical company that conducted its first IPO in August 2005 on the Tel Aviv Stock Exchange, raising 30 million shekels with a market cap of less than 100 million shekels. Everyone will agree with me that with those figures, she wouldn't succeed to raise money on NASDAQ. Since then, she managed to finance its growth through the exchange, and in May this year, she listed its shares on NASDAQ with market cap of 1.2 billion shekels, raising more than 200 million shekels. And as of today, its market cap is more than 2 billion shekels, and I think we all would like to duplicate this successful example. Lately, I served as a member of the committee that was set up by Professor Shmuel Hauser, who is the chairman of the Israel Securities Authority. The committee was set up for promoting investment in R&D and technological companies on the Tel Aviv Stock Exchange. Thank you very much.
With you, the whole gamut from selling companies at an early stage, at a late stage, building companies and taking them public. And I would like to start with playing the devil's advocate on the whole issue, idea of taking companies public in today's market, and ask you, does it really make sense? Given that if you're a successful company, if you're profitable, if you can have other vehicles to create working capital, if you need to grow, why subject yourself to this public scrutiny and liability, and why subject yourself to this quarterly reporting if you can have a private company that could thrive without it? And I would also want to know, from an investor's perspective, why would it make sense to help drive companies to IPOs and then wait for liquidity and the public markets to form an opinion on the company, as opposed to trying to get them acquired, take the cash, and move on to your next investments?
Yeah, so it's a very comprehensive question, and there is a very long answer. I think there are multiple ways to generate liquidity. That's the first sort of part of it. One of them is a very traditional way, the way which people used over the past thousands of years, is to pay dividends. And generally, good companies are supposed to be valued at the amounts of dividends they can pay over a long period of time. And that means that they can, at some point, start paying dividends, and that would be a liquidity. There is also another way, multiple other ways to generate liquidity for shareholders, which perhaps are not as well known to founders, such as capital recap, such as M&A with a private equity firm who will buy part of the business and do capital recap, such as M&A in general, such as secondary market exchanges. There's a bunch of them right now. In both of my companies, they are about 12 years old, Acronis and Parallels. We have several of those investors who bought in multiple percent, up to 10% from various shareholders. And so, of course, IPO is not the only way. There is a lot of ways. Yeah, you want to take it? No, but hold on, hold on. Just sort of want to finish the thought. Of course, people should always think about when you run a technology company that your main commodity is not money, it's time. And so whatever you do supposed to help you save time. Going public can save time, but it can also waste time. And of course, it's highly overhyped topic because there are so many businesses which make money on bringing companies public. Auditors, lawyers, stock exchanges, investment bankers, and they are very sophisticated salesmen, best salesmen in the world. They will most certainly be able to convince you that going public is the best way for your business. In reality, it's highly dependent on the story your business is about and on your financial situation, on predictability of your business. So it's actually highly dependent on your business. Of course, ultimately the best valuations in the history of IT business were produced by IPOs.
No, I'll agree with you, Sergei, that NASDAQ OMX has recognized that companies are staying private longer. So we're actually excited about the fact that we're launching the NASDAQ private market. It'll be one of the secondary exchanges you talked about. We feel with the Jobs Act in the U.S., there is an opportunity to create a liquidity program for companies that is controlled by the companies. And I think what we've seen in these other secondary markets is they weren't company controlled, and there's been a lot of angst about that. So we're going to take the approach that we have a full solution for companies, cap table management, all the way through a possible IPO if they want that. But we are having the most robust IPO market that we've had since 2007. We'll have about 90 companies so far to date. We have about 30 more for the rest of the year. So people are definitely seeing high valuations, seeing the benefit of going public. With the financial crisis, we saw a ton more companies go the route of M&A because they weren't going to get the valuations they wanted. But I would say the markets have changed, and the window's definitely opening to go public right now.
I think in the list of savvy professionals, you forgot to mention consultants, so we should add that to the list. I think just a couple of things to mention. I work with a number of companies that go through IPOs, go through mergers that are not ready for it. And the weight of additional burden in terms of reporting, in terms of governance, is very hard to bear. And I understand that that is a challenge. I think, however, the reality is I also work with some of the more successful Israeli companies that are very successful in the M&A market and growing. And the reality is, to scale as a company, you need good processes, you need good governance, you need good control. So actually companies that build the right structure, which takes care of the governance requirements of being a public company, in some ways are better scaled for the future. So there's a correlation between the two. So there's a positivity in the negativity of the IPOs. I think, Bruce, you mentioned something which is very interesting, which there seems to be a change in the Israeli market as well. There's I think in the statistics this year, as I've seen it since the Facebook transaction this week, the exits are over 5 billion and projected to be higher than last year. What's different is the maturity of the companies. The average deal size is much higher. It's around $140 million per transaction, which is a significant percentage higher than previous years. So companies seem to be exiting at a more mature stage, which means to some extent they are building in the processes and the controls necessary to deal with, I think, the challenges that Sergei mentioned. So I'm not an investor myself. Answering the question as to whether the IPO is the right route or not is not for me to answer. What I know is some of the negative vibes associated with being an IPO company are necessary for a company to scale anyway. So I'll hand over.
I just want to point out that I totally didn't mean the processes required. One thing is important is not to overdo these processes. So perhaps it's not always necessary to use very expensive offices of very expensive firms like PwC, but you can go to be much more efficient. But the processes are indeed good. The problem is that when you go in public, and I've tried it several times, none of my companies actually went, well, there are several companies which I was an investor in which went public, but companies where I was a chairman of the board or CEO, they didn't. but one of them filed with NASDAQ and didn't go public at some point. The problem is not the fact that you have those processes. The problem is that in the process you get all the big four talking to you about how they're better than the other big four, and you get to talk to 20 or 30 investment banks, and they will all try to take your time, and they're very good at it. And then you talk to several stock exchanges. I mean, we overdid the process as well. We talked to NASDAQ, New York Stock Exchange, LSE, and Amex. How's it called, the one in London? Amex? LSE, yeah. And there's another one, AM. So they will all talk to you, and so it's a very time-consuming process. And I think entrepreneurs, and a lot of entrepreneurs I've invested in as a VC, they sort of believe that going public is some kind of an ultimate goal, or even this word exit is very confusing. IPO is not an exit; it's rather an entrance. And it is not an ultimate goal. What you need to do is to run your business, and if you want to decide to go public, you need to spend as little time as possible and as little money as possible on being ready and then going public.
I'm from the Tel Aviv Stock Exchange, and I think that it is important also for the Israeli economics to make more companies go public on the exchange. We all know the amount of exiters. Last year and this year, there were enormous amount of exits in the Israel company. We all heard about Onovo only this year. I think it's important. I think it's very important to maintain these companies in Israel and let them grow by financing its way to by financing their way here in Israel, and of course through the exchange. Because of that, Shmuel Hauser set a committee last September to promote investing in publicly traded Israeli companies. And I'd like to say some word about this committee later on. Thank you.
I would like to ask you, while you have the microphone, and you, Bruce, I don't know if you have the statistics, but typically, say 2 years post-IPO, what percentage of those IPOs actually do as well as expected, as opposed to those that disappoint their investors? And also, if this has changed over the course of the last few years.
Yeah, I think it's hard to have those kind of statistics. I mean, IPOs in our mind is that they do fuel the economy. You look at, there's a Kauffman Foundation study came out that talked about 76% of the jobs in a company happen after the IPO, once they have the capital to invest and to hire the employees. So, I think there's macroeconomic instances such as the financial crisis that could affect IPOs not performing well after a couple of years. But in general, IPO to raise capital, you have equity to do acquisitions, and you have cash, obviously, to hire employees and to invest in R&D. These are all good things that most companies are seeking. So I agree, it's not an exit strategy, it's just the beginning. It's a milestone in the company. And those companies that look at it as a milestone to get them to the next stage are the ones that are most successful.
Can I just add one little thing, not on the success rates, but one of the things I've learned since I moved to Israel. When I was in the UK, most of my M&A work was with companies with single-digit growth statistics. My job now is with companies with either double or triple-digit growth statistics. The biggest reason for failing either post-IPO or post-M&A is that you lose sight of the growth of your company. You do all the things I think Sergio mentioned. You focus your time on the capital markets, you focus your time on M&A, and you take your eye off the core growth of the underlying business. And I think the businesses that are successful are the ones that keep their eyes on the customers and keep their eyes on the growth of new products and new business. And it's companies that do that well, I believe, succeed. Companies that don't do that well, I believe, fail.